Hello, good evening, ladies and gentlemen, traders and investors. Alex from MarketWise Asia here. Thank you so much for tuning in here, okay, on the Facebook Live and also on the YouTube live stream. So before I kickstart, okay, just want to say a good night to my girl, Janie. Good night, okay? All right, so if you can hear me loud and clear, please say a hi to me in the comments or in the chat box, okay? I won't bite. I'm very friendly. And if you're watching this on YouTube, okay, give a shout out, okay, and also subscribe to our YouTube channel, okay, and it just take a few seconds only. All right. So once again, if you can hear me loud and clear, please say a hi to me in the comments or in the chat box right now. Hello, just now, of course, quite a few of you guys already say a hi to me at the beginning, like Kelvin, Wailam, Dave, okay, Chia, Jin, okay, Keen, all right. Anybody else? Okay, we are waiting for more people to stream in right now. Okay. Okay. So, then fantastic. So let's while you continue to say hi to me, I'm watching the comments now. Okay, don't worry. Okay. So just let me continue. Okay, I will just proceed. Okay, I think today should be pretty fast. So once again, I try to keep it within short and sweet and sharp and to the point. So within 1 hour, and of course, if you have any question, feel free to ask me towards the end of the session. I'll try to answer some of them now. Okay. Hello, Bernard. Hello, Cecilia. All right. So let me share my screen right now. Okay, as usual, a disclaimer first. Whatever I share today, it is just for education purpose. Okay, not a recommendation to tell you what to buy or what to sell. And as usual, okay, do subscribe and follow our Telegram channel. So this is our Telegram channel. Okay, right now we have about 6,005. Every day, typically most of the days. Okay, I will share with you what is the what happened the previous night. Okay, the morning wrap, the price mover, and of course, if there's any breaking news, I will share with you guys here as well. And of course, if there is some of the insights, I will also share with you. So right now, okay, do subscribe to our Telegram channel. And the rest, like for example, if you're watching this on YouTube, okay, do subscribe to our YouTube channel, my personal Twitter account, and also TikTok account. TikTok, I don't usually post that, but once in a while when I get into the mood, okay, I will post something now. Okay, but as of now, mostly it's YouTube, Telegram, and also on Facebook as well. Okay, I'll post the link in the comments over here. Okay, so for this coming week, the economic data for this week, let me just head over to the Forex Factory first, okay? For this coming week, all right, so the main one will be actually on Wednesday midnight, that's Singapore time, Thursday, early morning at 2 a.m. There will be the FOMC meeting minutes. This is not the one where the Federal Reserve will announce the interest rate. This is just I think Jerome Powell will come and speak. So I don't know what he's going to talk about. Okay, he talk about economy, talk about interest rate, whatever it is. Okay, it's going to move the market. Okay, the market will sense what he is trying to hint to the market. Okay, and of course on Thursday, used to be a very important event. Okay, like previously I mentioned, but nowadays I don't think it is going to be an eventful kind of event already. It's not going to be an eventful event. Yeah. Okay. So 8:30 will be the CPI data month on month, year on year, and the unemployment claim. Unemployment claim maybe could move the market, but CPI, I don't think so. And you can see over there, right? The forecast is actually 2.5 year on year. So the previous was 2.5. So they forecasted to be 2.3%. So they expect the inflation rate year on year to drop again. Okay, and unemployment claim that he believe that slight increase. So let's see whether you're going to spike up or within the range. Okay, and then on Friday there will be the PPI data. Okay, again I think that it is going to be a non-event. Okay. Everything okay? If everything okay, just type yes in the comments. Okay, well, before I move on over there, and like what I mentioned today in the so-called for this live, right? I said there be four issue, okay, to look out for, okay, as we head into October and into the final quarter of the year, right? So there were a few events, okay, last week. So I'll go through one by one. This is just for your knowledge and also for some of the so-called macro things that you might need to know. Okay, be aware of a lot of these things. Okay, in terms of execution wise, okay, actionable wise, it is not really actionable, but it is good that you understand what's happening in the market. Okay, number one. All right, so last week, if you remember what I said about the market, I said that the market breadth was still high. So I mentioned that I think there could be some downside, and I won't be aggressively going long. Okay, so the market actually didn't really move much. Okay, all right, so it just it didn't really spike up, and it also didn't really spike down also. So there wasn't really upside move, and there wasn't really also a downside move also. So kind of a ranging, but towards the start of the week, there was some correction, and of course, then during the labor market, okay, the numbers surprises to the upside. Then you can see that on Thursday, Friday, price starting to move higher again because of this labor market, the data. So for the US non-farm job report, right? So the jobs added, okay, was way above the forecast of 150K. So jobs added was 254K, okay, and unemployment rate, okay, actually it didn't really move a lot, sometimes just from 4.2 to 4.1. Somehow, in the media, it just said, oh, because of the unemployment rate decreases from 4.2 to 4.1, the market shot up and all these things, but it didn't really move a lot. Okay, the only thing that it really moved is actually the job added, okay, and the about the previous month revision, right? So jobs added in August revised upward from 142 to 159K. So all in all, okay, so you can see that the US labor market, it is still pretty strong. Okay, so before I move into the next section, right, just have another quick show of hand here. Okay, I will do two polls over here before I continue, so that to reflect the market sentiment. So I think there'll be more people coming in right now. There'll be 100 plus people right now. Okay, all right, both on YouTube and Facebook. So I'm gonna ask you two questions. Okay, you just answer me. Okay, just entertain me. Participate in the poll. Okay, how many of you here think that next year there is going to be a recession? If you think there is a recession, just type Y. That is yes. If you think there will not be a recession next year, okay, just type no in the comments. Okay, I'll take a sip of water right now. So very easy, just yes or no only. Y or N. Okay, next year. Okay, I don't know whether it's January or December, but anyway, right now the analysts, the economists, the market, the media is it's kind of trying to make this topic sexy, talking about recession. Previously, a few weeks ago, talk about recession, all this, right? So once again, ask you the poll, yes or no. Okay. Wailam say no, Pei Wen say no, LW say yes, no, Christina no, Janita no, Xianglun say yes, yes. Sungrid say no, 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 yes, no. Yes, no, Jessica Ang, yes, yes. Actually, there are quite a few yes and no. So it is William say noise, okay, yes, you are right, okay. Raymond say yes, okay. It is a good sentiment, okay, so that we know what most people are thinking. We can see you can just see from the so-called your own participation, right? I think about, I don't know, I think that about 60% gravitating more towards the no side. Do you agree with me? About 40%. So it is still contested. It's not like lopsided. One say yes and one say no. So it's like about 60% still say no. Okay, so I think it is still to be contested. Okay, at least I know that the market doesn't have a very clear win, yes or no. If everybody say yes, then most likely there will be no recession. Okay, if everybody say no, then there could be a chance that there could be a recession. So my view is that, okay, as of now, as of what I've gathered right now, my sentiment is that there won't be a recession next year from all the job labor market and all the at least from now the unemployment rate, it is still pretty stable, and all the some the other market data like credit card and all this stuff, okay, it is still looking okay. That's my personal view lah, okay. All right, it doesn't matter. Okay, now second poll, okay. As of now, within the next how about next 2 weeks or so, do you think the market will have a correction? Because right now the S&P is still at a relatively high. So do you think within the next 2 weeks or so, the market will have a steeper correction? Okay, right now still don't have. So if you think that within the next 2 weeks or so, the market will have a correction, okay, just type letter C. Okay, if there's no correction, once again, just type no. Okay, in the comment. Okay, C and no. Correction and no correction. Okay. I read in an article the jobs increase is in the government sector. Private sector actually declined. So Naso, do you have the so-called the source? Okay, where there's this the article, and I would like to take a look. Okay. Yeah, I mean that this is good knowledge, okay? All right, maybe you are lopsided, I don't know. But as of now, I think that overall, based on my personal gut, not gut feel, as in like, at least in Singapore market, labor market, okay, from what I talk to other countries, some of the business contact still seems okay. Okay? All right. So, oh, okay. Pei Wen say C, correction, C, C, C. So quite a number of you say C. In fact, William say no. I would say about 90% of you guys say there will be a correction. Okay. Jessica saying no. More gravitating more towards the correction side. Okay. But still not lopsided. Okay. All right. I think I clearly remember, I think 1 month ago when I asked whether there will be a correction. Once again, I think it's 100% lopsided. Everybody say yes. Then eventually, the market just to have a correction. Okay. Global market investors. Okay, global market investors. Let me take a look right now. Global market investor. Okay. Is it from the Twitter account? This one, is it global market investor .xyz from the Substack, is it? Okay, later I'll check it out. Okay, global market investors. Okay, thank you so much, Nesio. So let me continue over there. So okay, so right now, based on what at least the public data, I don't know whether they're going to twist the data or not. At least if the job market it is really okay, and based on the non-farm report, okay, the jobs added is way higher, then that could have an impact on the next Fed rate cut. Okay, so right now, based on the market, okay, the futures market on the interest rate, right? Okay, the market is not expecting a smaller rate cut of 0.25% instead of the previously anticipated 0.5%. Okay, so this is the, I think there are a lot of charts lah, but I mean that this is again something what is the projected one. So right now the market, it is pricing in, okay, 2 more 0.25 cuts this year, which means that the next FOMC meeting, okay, most likely is not going to be another 0.5% cut. Okay, it's going to be a 0.25, another 0.25. So which means that by right now it's 5%. In November it's going to be 4.75, a 25 basis point cut, and then in December another 25 basis point cut, okay, to about 4.5%. So the rate will be at about 4.5. Okay. All right. So yeah. So which means that the market is anticipating a smaller rate cut because, okay, of the very good job report. So which means that the market is anticipating that Jerome Powell, okay, don't have to really cut so aggressively, okay, so-called to have a soft landing. The reason why some people are thinking that the Fed is going to cut so aggressively because they foresee there could be a recession ahead. But judging from the job report right now, maybe not so aggressively. Okay, and of course, there will be another concern also. Okay, we expecting there's no recession. on one hand, okay, when the so-called the economy is so good, when there's so many jobs added, when everybody has a job, everybody has money to spend, okay, all right, which means that there could be a small chance that inflation is going to come back again. Inflation, okay, that's what some economists, analysts are so-called the white elephant in the room. Okay, the inflation right now is of course is coming down. Okay, but if everything is staying elevated for the wage growth and all this, right, elevated at 4% year on year, so which that the wage is still growing, people still having a job, there could be a chance that inflation could creep up again. All right, but anyway, as of now, based on the outlook, right, so the interest rate is going to gradually fall to about 3 to 3.5% in 2025. So this is the one that I show you just now. So 2025, they are going to progressively cut, okay, not every month, okay, or 2 months. There might be certain months that they keep the interest rate constant, but all in all, okay, it is going to be roughly average, okay, next year at about 3.5%. Okay, as of now, this is what the market is pricing in. Okay, so if you understand what I'm trying to say, just type 3.5 in the comments. Just type 3.5 or 3.5 in the comments. Okay. So this is the second thing, and this is the first thing, okay, about the interest rate goal. The second thing, okay, to me, I think if you have read last week, but I think not much concern. Okay, so this is there was a strike going on, right? This ILA strike. Okay, so 47K member union strike for higher pay and protection. Singapore, you won't be able to see that 47K union strike one. Okay, affecting 36 East Coast and Gulf Coast ports. So the estimated loss is between 1 to 5 billion. So there was a resolution. So just within a few days, right, there was a agreement. So again, once again, they agree that it's going to be another wage hike for them, 62% over 6 years. So raising average pay from $39 okay, to about $60 per hour. So that is quite a bit, okay. All right. So once again, this is just the news last week, but it doesn't really matter to me. I think that it doesn't really affect the market as of now. Okay. Of course, this geopolitical tension is one important one. Okay. Last week, everybody was quite frightened about this escalation in the Middle East. Okay. All right. So somehow, okay, I'm not sure whether you remember, okay, last week during the Facebook Live and the live stream, right, I didn't really show the public what I mentioned to you guys. So last week I said that, hey, if you are smart enough, you should have caught it. So last week I mentioned, hey, ask the SVI members to, hey, look at somewhere around here. So I didn't mention it is oil, crude oil, gold, or silver, or natural gas, or whatever it is. But actually, I told them it was actually crude oil. Take a look at the crude oil. Take a look at the crude oil. Okay, it was just before the Middle East have this escalation. Okay, right now for those SVI member, if you caught it, okay, I think many of you caught it, the oil, right? Okay, just type me in the comments. Okay, you caught it, okay, the oil thing. So just to let you know over there, okay, so this is the SVI, the seasonal vantage insiders. Okay, all right, oil still going up. You shouldn't type oil still going up. You should type me, Melvin. Okay, so I actually added in the web database. So instead of the data sheet, I provided the web database as well. So this is going to be very useful to have a quick look. Okay, maybe some of them do not have a spreadsheet with them and such. Okay, maybe I'm just a quick show to show you what is it. Not revealing too much secrets out there. Okay. So this is the web base. So you can see that you have to search any stock. So for example, search like for example NVIDIA, NVDA. Okay, you have this is like end of month. There could be some positive seasonal gain. So this is very useful. Okay, I load the bullish, bearish, ETF and such. So it's very useful at a glance. Okay. So and then the members area. So I actually show them. Okay. This is the today one. So yeah, data sheet. So this was last week. Okay, 30th of September. Okay, so I did some update and such. So the main one I'm going to share with you is actually this. Okay, this long opportunity in the energy sector. Okay, 30th of September. So as I mentioned, I was looking at the oil. I didn't know that there was a so-called the Middle East thing. Okay, all right. So you can see that I said that it go long in the energy sector because market the energy breadth was low. Okay, and looking at price action plus the seasonal data, all is in play, right? Could be in play. So I think ask them to take a look at XOP. So you can see that after that, okay, if you take a look at XOP, this is the oil and gas exploration and product ETF. This is the ETF over there. So you can see over there when I first mentioned it was here. Okay, 30th was over here. So on a Monday, so quite a number of them actually also entered on a Monday over here. So you can see that it just go all the way up. Again, I don't know what is going to happen 1 month, 2 months, 3 months ahead. Okay, what we are trying to do, at least for me, okay, it is a swing trade. It is a swing trade. It is a swing trade. So typically, for me, I hold typically 2 to 10 days. Okay, at most maybe about 1 month. So that's it. So for this clean swing up, okay, definitely that is a 1.5R or 2R for some of them. Okay, for me, I just got it at 1R, 1R profit, which means that if I risk $100, I get back $100. If you risk $1,000, okay, if 1.5R, you get back $1,500. So you can see over there, I think only two, Xianglun and Melvin, but the rest you can see that quite a few actually posted in this seasonal vantage. Okay, Chai Sing, okay, got this Burlington store, okay, a short, okay, selling short now 1.3R gain, not too bad. Okay, not too bad for Chai Sing. Okay, so you can see over there, so just a case study lah. Okay, you can see that personally previously like Melvin, okay, he actually caught the oil. Kenny also caught the XOP. For me previously, okay, I talked about the grains, right? Okay, soy, corn, wheat, and all this. I'm not sure how many of you actually entered for those public one. Okay, for me, I actually long buy into the wheat. Okay, buy into wheat. Okay, with a 1.5R profit, and then XOP also with a 1R profit. So Kelvin, okay, I think he's inside here right now. Okay, with XOP as well. Okay, profitable. Lucky. Okay, another one with the Burlington one. These trade are all over. Burlington is over already. Don't need to look at Burlington in case you have to say, hey, is it a time to go in? Not a good time to short now. Okay, like Koi also is it XOP? Yes, XOP as well. Okay, Cheng Hong also XOP. Okay, Chai Sing XOP. Henry, some of the other stocks over there. Lloyd stocks. Kenny also CVI is also another energy stocks. Okay, so quite a number of them. So this is no high side. No, I just see what I see. Okay, I just say go. Okay, we manage the reward to risk. Okay, and then we just go for it. Okay, all right. So there is the seasonal is in play. Okay, market breadth also is in play, plus a good setup. Okay, plus a good trigger. So all in all the things were there somewhere around here. I say that okay, let's give it a try. So then we can take a look at the energy sector over there. All right, so this is the XOP. And yeah, so oil and commodity prices increased. So previously, once again, I think 1 or 2 weeks ago, I talked about the, like previously I talked about the grains, right? Okay, I talked about the sugar. I think sugar also went up quite a bit. Commodities, I say DBC, right? DBC, the commodities, okay? Of course, part of the DBC, the component commodity is actually the oil, but nevertheless, overall, you can see that commodity price has increased. If you take a look at DBC once again, okay, it after that, it just continue to go higher all the way. Okay. Anyway, how many of you here the public one, not in SDI, actually somehow you watch my Facebook live and you went into the, I don't know, the commodities, the grains, or the sugar. Okay, if this is you, okay, can you just type me in the comments or not? Non-SVI, you are not from Seasonal Vantage Insiders. Okay, just don't take a look. How many of you actually, really after my analysis, you check it out yourself, and then you think that it's not too bad and such. I don't know how many of you answer lah. Maybe the answer is 0. I don't know. Okay. So right now we have about 163 people in the room, both on YouTube and Facebook. Okay. How is it Sugar doing now? How is it Sugar doing now? Sugar. Okay, after that superb ran up, okay, it now is consolidating right now. Okay. Don't ask me whether Sugar can buy or not. I did not check the seasonal data right now, so I have no idea. But previously it was a good entry, okay. All right, but I didn't go into Sugar lah. Okay, so this is this, okay. So treasury bonds, gold and VIX move lower over the past week, okay. And then oil is up 10%. Okay, the only actually, I didn't really tell my SVM members. The only regret I did not actually short bonds because I also have this idea that if the interest rate is going to go down, the treasury bonds is going to go higher. The price is going to go higher. So if you take a look at the like treasury bonds ZB, okay, it is actually going down right now very strongly. Okay, so somewhere around here, I actually wanted to sell short the treasury bonds, or as a proxy, you can use the TLT to sell short. Okay, you can see that price actually, it was a very good kind of reversal. A pin bar, okay, which I don't like pin bar. I do not pin bar. Can you see that it trapped some of the longs? Okay, hit the CPR, okay, and then boom, went down. So for the SDI, if you actually look through your ETF data, okay, I didn't mention okay, if you look through ETF data, you can actually see that the treasury bonds during somewhere around this period, it is actually down one. It is actually on the downside, the bearish one. I'm not sure how many of you actually, go through the ETF data yourself and manage to infer from that. I saw it, but I have no confidence in trying to go for a short. Okay, so I decided, okay, maybe I'll just skip that. So once I skip that, then I decided, okay, not to tell you guys as well. Okay, all right. So this is, so one thing I regret in a way that I missed this good shot. So seasonally, this period here is a good shot. Okay, just in case, just to let you know, so I'm not a god. Okay, I don't get every trade right. Okay, I do miss some of the profitable trade as well, but life still goes on because every single week I know there will be trading opportunities, so don't need to worry lah. Okay, so this is for the treasury bonds. Okay, so you can see that, as I say, okay, the seasonal is the closest thing to a crystal ball already. So I keep repeating the same thing. So I really do know exactly what to look out for. Okay, next week, the following week, the next week. So I really has a list of ready ETF and stocks to watch out already. So as mentioned, okay, the closest thing to crystal ball. Okay, all right. So anyway, US. Okay, the last week I talked about the US election. Yeah, so we are really heading closer to the US election. So just about 4 more weeks to go, about 1 month. So the stipulated date, it is 5th of November. US election, last week I mentioned already, US election date, I think should be 5th of November. So about just 1 week, not 1 week, 4 weeks to go. That's 1 month to go. Okay. So last week also mentioned that typically there is a increased volatility, okay, leading to the election day as there's uncertainty and anxiety rises. And historically, okay, the market just pull back correction just before the election, okay, but tends to recover, okay, post-election, regardless of the winning party, okay, as uncertainty subsides. So last week, okay, I talked about the data and all this, okay, typically, 6 months, 1 week before, the market tends to drop. 1 month later, there's some slight increase. About 1 year later, typically the market just increase quite a bit. Okay, so I'll use another chart to illustrate this. So this is the just now I forgot to illustrate this. So this was the commodities. So previously, it just kept selling off until somewhere around here. The breadth and the seasonal and the price action plus the setup, is in line. We just go for a long somewhere around here. Okay, so this is the crude oil. So the another one that I'm going to share with you is this one, okay? The 6 months before the election date over there. So this is the one over here. There's no answer. Totally non-SVI member did not take any of the trade ideas that I mentioned. Or are you guys too shy to share? Anyway, okay? Or in fact, most of you here are SVI. Okay, never mind. So you can see that, this is a 6 months before the election. All right, so just zoom in over here, you can see that, okay, this is calendar days before the election. So you can see this vertical line here. These are brown or golden vertical line. This is the day 0. This is the election day. This is the election day. Okay, can see that typically, about 20 plus day, about less than a month, okay, the market tends to have a so-called a correction, okay, just before the election, then it starts to spike up again, and then after the election, it tends to drop a little bit, and then the market subsequently move higher, So you can see from this line over there, the green line is the average price, okay, average for the both parties. For the blue line, which is for the Democrat, the market tends to somehow love Democrats better, okay, which means that if Kamala wins, okay, then maybe the market can push a lot higher, not a lot higher, maybe a little bit more higher, okay. And this is the red line, okay, the average when a Republican wins the election. So it still goes higher, but lesser return compared to Republican, which is the blue line, okay. But all in all, you can see that after that, 6 months later, the market tends to go higher, okay. And you can see that this is actually over here, this period, 30 day to 0 day, is follow closely in line with the so-called the seasonal data as well. So this is the seasonal data. Is it here? Not this one. Yeah, where is it? Yeah, okay. I think I showed before over there. This is the seasonal trend of the S&P over the past 13 election year cycle, which means about 50 years, okay? 13 election year cycles. So you can see that typically, okay, the market tends to be weaker. Now it's October, weaker at the start of October. So last week, okay, the market actually kind of stopped, not pretty strong, okay. Didn't really drop a lot, but at least, it stopped, okay, didn't really go higher. And as of the seasonal, again, this is based on historical data, okay. Early October to maybe mid of October, market tends to be a bit choppy, but it still tends to grow, to grind higher. Okay, maybe until the mid of October, until the end of October, then there could be another correction before, after the election, the market tends to continue to go higher into the year end rally. Again, this is just based on the past 13 election year cycle. It doesn't guarantee that it's going to be exactly like this. But again, this is as close to as crystal ball as we can really. So we still have to look at the price action, but at least it gives you an idea, anticipation what could happen. Okay, clear so far? All right, if everything is okay, just type okay in the comments. Okay, about 36 minutes, okay, still okay. Clear so far? All right, so let's head back to this. So all the 4 things I mentioned already. So the 4 issues that you need to understand heading into the 4th quarter, especially since last week, of course, is the US labor market. All right, and then the strike, which I think is a non-event. Okay, and then this geopolitical tension. Okay, the escalation in the Middle East, which the SVI members take advantage of that already. So we have a good run for the oil and energy sector. And then, of course, the election cycle. So typically leading into the election, there could be maybe some, I don't know, some weakness in the market. But if you take a look at the market right now, today market, okay, is not strong. It's not so strong. Its market is having correction, okay? And once again, let's take a look at the S&P cash index, okay? So if you take a look at the spot gamma, okay, this is the, the right-hand side, it is the 0 gamma level, okay? Left-hand side is the high volatility, right-hand side is the less volatility. So this is the 0 gamma level where the options dealer has a net gamma or net positive gamma or net negative gamma. So you can see over here that the intersection here, okay, it is about somewhere around 5725. Okay, 5725. I already mark out this already. 5725. Okay, can you just type 4D in the comments? 5725. 5725. So, okay, if price can still hover and stay above 5725, this is the cash index. Cash index. Okay. I think the market, I think it is the uptrend, okay, it is still intact, okay. If price really do close below 5725, okay, there could be more volatility to come. So which after that, there could be a more correction, okay. But as of now, it is still holding okay. The market is still in a very good uptrend, okay. All right. Clear so far? Clear. So this is the S&P cash index. If you take a look at the if you take a look at the futures, typically I like to look at the futures. You know, market it is still hovering at the upper range of the yearly CPR, still doing okay. Nasdaq, okay, it is again we are once again at the CPR level over there. The Russell 2000, okay, we are also at the CPR level. So this is pretty crucial. We are holding at the central pivot range level. Okay. All right. So of course, last week I said that the market breadth was not very good, right? So last week I talked about the DP gallery from stock charts over there. Okay. So for those who are new to me, okay, I talk this quite a bit. So this is from stock charts. It is free. Okay. For paid members, you can see other things like the Dow Jones, Nasdaq, and S&P 100. But I think this is good enough. S&P it is good enough. All right, so you can see over here, okay, I talk about the percentage of stocks above the 20 day, 50 days, and 200 days, right? So I mentioned that it was elevated previously, okay? It is still, market breadth is still relatively at a high, okay? But you can see that, okay, beneath the surface in a short run, okay, the 20-day EMA, there was some correction going on, okay, in some of the stocks in the S&P top 500 stocks. Previously, last week, it was at about 80% at the high one. So right now, it dropped a little bit, okay, to about 62% now. So which means that 62% of the 500 stocks, okay, it is above the 200. So about there is about another 40%. It is below the 20-day moving average right now. Okay, so there were in fact a little bit of correction, just that it might not be so obvious. Okay, if you just look at the S&P alone. Okay, just like S&P alone. Okay, so this is the DP gallery, but the percentage of stocks above the 50-day it still remain elevated. 200 days it is still elevated, but the 200-day it is fine because typically when the market it is in a very strong uptrend, I think bulk of the stocks should be above the 200-day MA. Okay, all right. So like I think interestingly, okay, the thing that I want to mention is this. Okay, so one of the market breadth. So the McClellan oscillator, where is it? Okay, always cannot find from here. Where is it? This one. Okay, so previously I said that there was a divergence right, while the market it is actually going higher, the McClellan was actually going lower. But somehow, okay, after the end of last week, okay, the McClellan is at a relatively low level right now. You see, at about minus 20 to 30 that level. This is the zoom in part over here. Okay, can you see it is at a, I try to zoom in. Can see or not? Zoom in, can see, right? Oops. Okay, over here. All right, you can see it's at a relatively previously low level, not exactly at the lowest, but relatively low level. Even though like the market didn't actually drop a lot, okay. So if you actually went into the click on the chart over there, you can actually see that typically when it is at a relatively low level over there, okay, at about minus 30, 20, minus 20, you can see over there the cursor. It continue to go higher at a relatively low. It just go higher. Maybe zoom back down to maybe somewhere around here. Okay, you see at a low, it go higher. Maybe around here. Okay, it also go higher. Here maybe relatively low. Okay, over here. okay, somewhere around this level, okay, around this level. You can see this shaded gray vertical line where my cursor over there. Market tends to go high. Once again, okay, I'm not sure. I don't have a crystal ball whether it is going to go higher or not. But it seems that it looks okay to me. Okay, there was a little bit of correction. It's not obvious. Okay. All right. So again, yeah. So if the market really want to continue to go high, I think maybe this 1 week or so is the best chance. Maybe after next week or so, okay, the market might drop maybe a lot more, I don't know. But anyway, okay, I do have crystal ball, but this is what is most likely to happen. As I mentioned, right, okay, based on historical data, maybe mid of October, if according to the playbook, okay, if according to the history books again, then mid October we might have another correction. But as of now, from now until mid October, I think the market it is still okay if it plays out like that. Okay. All right. So this is of course, for the seasonal vantage insiders, I have already shared with you guys, what are some of the stocks I'm looking out for this week. Okay. So do go to the members area if you have no time to watch the video. Okay. At least read the summary now. Okay. All right. So I think as of now, I have finished what I've wanted to say. Any question? So if you find value in today's session, okay, give me a like, share, okay. I really appreciate that. If you're watching this on YouTube, like it and also subscribe to our YouTube channel. If you're watching this on Facebook, also give me a like. Also, you can also share it out. I really appreciate that. So right now we have 170 people in the room, combined both on YouTube and also on Facebook as well. Okay. Any question? Oh yeah, before I forget, okay, one trade ideas. Okay, I don't mind sharing with you the rest of you guys. Okay, I am actually looking at the crypto right now. Okay, all right, crypto. You can see that crypto. This is Bitcoin. Okay, so it has a kind of a multi-month correction after the impulse move up at the start of the year. And you can see that right now, once again, strictly on price action, price is above the cloud, okay, and also right now above the CPR. And based on seasonal data, we are somewhere around a good period of time. Okay, I won't show you the exact date. Okay, the SEI members will know when is the exact date. Okay, well, we are around here, around this period already. So yeah, so this is one thing you might want to look at. Once again, I'm not saying that crypto, Bitcoin, Ethereum, and the rest of the altcoin will go higher, but the decision is yours. Okay, this is meant for a position trade. Okay, for me, it is a position trade. It is not a swing trade where you hold for a few days only. So most likely, okay, I will hold until the next year, at least for another quarter, that kind of thing. So this is what I'm doing. Okay, so for those who are not crypto native, you don't really have your own wallet, you just want a simple, easy way out to participate, okay, in the upside of the potential crypto move. Okay, there are one way you can do it. Okay, one way it is actually to buy into the ETF. Okay, so the crypto Bitcoin ETF for Bitcoin, it is actually I think the highest AUM, the highest asset under management. Okay, it is IBIT. Okay, Bitcoin ETF. This is the Bitcoin IBIT. Okay, if you are looking into Ethereum, then the ETF, I think the one of the higher so-called AUM, it is ETHA, the Ethereum Trust. Okay, ETHA. So this is the Ethereum ETA. So sorry, this is Ethereum ETF. Okay, so this is a proxy. If you are not crypto native, you don't want to hold it in your wallet and such. So this is an easy way for you to participate. Okay, so Darius, very long never asked you HSI. HSI is definitely parabolic for in the short term. Okay, in the short term HSI. Okay, all right. HSI, where is it? Okay, in the short term, you just see yourself it's definitely parabolic okay, short term okay, again, high can go higher. I'm already inside Baba, so I have no complaint. So I'm part of it. So again, the Hang Seng and all these Chinese stocks, Hong Kong stocks, it is more going for the long-term play lah, okay, not for the short-term play. Okay, short-term, I have no idea when is it going to correct. Okay, I have no idea. I have no idea. Okay, all right, yeah. Okay, if you keep holding, you guys should be in good profit right now. So yeah, short-term, I really have no idea. Okay, high can go higher, but if you ask me if you have not entered right now, if you ask me whether can enter right now, it's a very difficult question to tell you lah. Okay, swing trade wise is definitely not a good time to enter lah. Okay, position trade wise, okay, because the timing it is not so precise. Don't need to be so precise lah, because you're holding for 3 months, 6 months, 1 year. Okay, you enter. Let's say if the market do have a correction, okay, you enter here, 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 here. Also, doesn't matter that much, because at the end of the day, eventually the market will go higher like that. Okay, all right. So yeah, that is my view of Hang Seng Index. Okay, there is an intervention. The Chinese government is doing some intervention, and it looks like, okay, on a longer term, it seems like on a weekly time frame, it is, yeah, okay, you can see that, Hang Seng Index, okay, this is the first time in August 2021, okay, first time in August 2021 that price has broken above the cloud on the weekly time frame. This is a very long-term perspective. So long-term wise, I think it is still okay. But again, you need to be aware that Hong Kong market, Hang Seng market, the Chinese market, okay, it is very dependent on the Chinese government. They can say one thing, okay, it is going to the market, the Chinese government can say one thing, okay, and it's going to bash the market again. So it's very sensitive to what the government wants to do. So once again, if you really want to participate in the Hong Kong market, okay, it has to be a long-term approach. Okay, at any point in time, it can go erratic, haywire. One time the Xi Jinping says something going to go higher, to go higher. So seem to like it, say something control the market and go down lower again. Okay, all right. Ken, any other questions so far? Any other questions so far? Okay, today market is pretty volatile. Up, down, yo-yo. Even though I did not go into the intraday time frame, I just by looking at the price movement, the percentage move, it is pretty volatile today. Okay. In a sense, parabolic is not too dangerous if that is if you are holding for a long-term perspective lah. Okay, it is undervalued. Okay, how undervalued it is. Okay, you can check it out based on what here say. They say, market is very undervalued. So if you decided to hold for 2 years, 3 years, then enter now, enter 2 weeks later, it didn't really make much difference to me lah. Okay, but if you're talking about short-term swing trade, if you want to buy at a lower price, cheaper price, then definitely not a good time right now. Okay, I do not answer you that. I mean, short-term wise, not a good price. But long-term wise, buy today, buy tomorrow, buy next week, buy 1 month later. I think not much difference. If your holding power is like 1 year and above, that kind of thing. Okay. Any other questions so far? All right, so I think I'll give you another 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so if there's no question, okay, I will call it a day. And if you really enjoy my session today, okay, please give me a like and share also and comments, okay? And also type value in the comments, okay? Type value in the comments. I really appreciate that. STI Arden. Arden. Are you SBI member, Arden? I can't remember. STI. The very good movement was actually earlier. Now I can't really tell you whether it's good or not. Okay, this is the weekly time frame. But right now it's undergoing a pullback. Okay, but the Singapore market is actually doing pretty well this year. So it has been trading in a very tight range for the longest time. Okay, trading in a tight range for longest time. Okay, for many years. Okay, but it's trying to break above this 3006 level. So if within the next few weeks or so, or within the next few months or so, if price can convincingly break above 3006 level or to even 3007, then I say that the STI, we are in the next phase of movement. In the next phase, because we've been trapped in this. I'm not sure about you. Okay, I started investing in. I started in oops. Other than SBI. Okay, all right. So for the Singapore market, I started investing in 2011. Okay, after the financial crisis in 2008, the STI just basically just stuck. Okay, just stuck in this range. In this range. Okay, so if price can really convincingly go above 3007, then I think there could be more upside to go. This is my view, but it is pretty long term. It is pretty long term. Okay. All right. So with that, thank you so much. Okay. Then thank you so much for all the comments and the value. So with that, just nice, about 1 hour, less than an hour. With that, thanks so much. And I'll see you guys again next week. All right. Thanks and bye-bye.